Hello everyone. Today we are going to discuss on a very simple strategy but that is very powerful, and people or traders who do not have much experience in finding the market direction or find it very difficult which way the market would go for them, there is a very nice way that they can find out the direction of market, and also they can trade the market for that particular day. So today we are going to discuss one intraday strategy which can be applied on any stock, equities or indices, and the name is, most of you might have heard, but I'm going to explain it in a different way for you, and this is called initial balance strategy. If you can use it in a proper way, this particular logic becomes very powerful, and also it gives you a gist of how the market is going to behave in the next 2 or 3 hours. Okay, so what is the market timing currently? The market timing is 9:15 a.m. till 3:15 p.m. And what is initial balance? Before initial balance, we are going to set our time frames. So we are going to discuss this particular strategy into 5 minutes time frame. Okay. And before we discuss initial balance, we are going to discuss long and short build-ups. So already I have discussed short and long build-ups in one of my tutorials. You can go and check it out. Maybe that is in one of the playlists that I was explaining for trading and investments. Okay. So what is a short build-up and a long build-up? We need to know. Short build-up and long build-up. What is a short build-up? Short build-ups are nothing but structures like this. And what is a long build-up? So this is a short build-up. And what is a long build-up? A long build-up is a structure like this. Okay. Now let's move on to the charts and look for long and short build-ups. So you can see structures like this. This is called a short build-up. And what is the condition? The condition is there has to be at least 3 small candles followed by a strong candle. So this is what we call a build-up. Okay. If you can see, there are small 3 candles at least, which has to be in a straight line. You can also add one more condition. Small candles has to be in a straight line. this is what is called a straight line, right? So this is called a short build-up. And what is a long build-up? Long build-ups are structures like this. At least 3 small candles followed by a large candle. Okay. Comparatively, it has to be at least thrice the size of the small candles. So this is a short build-up. And what it indicates? It indicates that the price might move down. Let's write it as SB, which is short build-up. And let's mark it as LB, which is long build-up. And what a long build-up indicates? It indicates that the price might go up. Okay. So this is what we call a short and a long build-up. Now this particular logic of short and long build-up, we need to combine with initial balance. So now we know what a short and a long build-up is, right? Now we have to combine both short and long build-ups with initial balance. So what is the initial balance? Initial balance is the range or is the area of price formed in the first 1 to, or let's put up in this way, the area, the range of price which is formed in the first 90 minutes of the market. Okay. So let's say the market starts at 9:15, and let's say by the time we reach 10:30, there is a range of price which is formed, and this particular range is called initial balance. And why it is important? Because the initial balance formed in the first 90 minutes of the market is important for the rest 5 to 5.5 hours of market. Based on the initial balance, the rest of the market is kind of dependent. So this is what we call an initial balance. And every day when we have 10:30, the time 10:30 a.m. arrives, we are going to mark our initial balance. And how we are going to mark the initial balance? We are going to mark the initial balance like this. This is the open of the market. This is what time? 9:40. And around 10:30 the price was here. And we are going to mark the high and the low of the market. Right? This is the high and this is the low of the market till 10:30. So if you look at the chart like this, till 10:30, what is the high and the low of the market? The high and the low of the market is marked in this way. Okay. So this is going to be the first task that we are going to do. Now, to take short positions, which means either you can buy a particular stock or you can sell it, right? you can short it. Now around the initial balance we are going to look for long and short build-ups. So now we are going to discuss on entries. And this is the first entry. The first entry is going to be, let's say, initial balance plus long build-up. Second strategy would be initial balance plus short build-up. Okay. Now let's try to find the first strategy. Okay. Great. So this is the day start, and we are going to mark the low, and we are going to mark the high of the initial balance. Like this is the time 10:30, 10:45 around. The market was like this. So this is the high, this is the low. Right? And now we are going to see a long build up for a buy entry, which means if the high, this is the high of the initial balance, and this is the low of the initial balance, right? So if there is a long build up and the market crosses or cross the high of the initial balance with a long build up, so this is a long build up, we are going to take a trade and we are going to buy, and we are going to take our trades around this position. And what is going to be our stop loss? Our stop loss is going to be this particular candle which breaks the initial balance just below this, around this point. Okay, clear? So this is what we call the entry for initial balance plus a long build up. Now let's move to a short build up strategy and see how we can get a trade. Okay. Okay. Let's look at this 9:15, 10:30, high and the low. This particular price broke the low of the initial balance, but was there any short build up? No, right? So this is not a trade. Again it broke over here. Was there any short build up while breaking the low? No. So there is no trade for that particular day. Okay. Again, high and the low. Now we are going to see this particular point. When this particular initial balance was broken, was there any short build up? No, there was no short build up. So there is no trade. But over here, if you see, there was a short build up and there was a break. So at this particular point, we are going to take a trade, and that is going to be on the short side. Okay. So this is how we are going to plan our trades. Let's look at a few more and let's find. Okay. This is the high, and what time is 10:30? Around this point, right? So we're going to mark this. Was there any short build up while breaking? Yes, you can mark this also as a short build up, and you could have taken a position over here. Most of the time this particular strategy works. And if you're going to use this particular strategy, the biggest advantage is market direction. This is a beautiful trade. Price directly came down. This was the initial balance, and directly it broke the initial balance with a short build up, and you are going to short it. Which means now you know the initial balance is broken, and there is no chance of reversal until and unless the price again moves up and get inside the initial balance. So with this, there are a lot of advantages that you get. The one is the market direction. What is the second point? The second point is you can stay in the trades for longer durations. Why? Because you know, since the initial balance is broken, there is a lot of chance that your trade would work, and also the price would not just reverse, and if the price get inside the initial balance, only then there is a chance of reversal, otherwise no. Right? Let's look at one more, then we'll close off. I hope you like this logic. This is 1030, right? Beautiful trade over here, you can see. Long short build up. For traders, I have seen even in my initial career, when the market starts around, let's say the market has started like this, and this is 1030 around. You don't know, right, where the market would go. You might feel the market would cross the high of today's day, and you're buying call options, or you may be buying futures, and you do not have much of logics or understanding of the market, let's say, and now you're confused. But if you use initial balance and the short build-ups as the logic, you definitely find here that the low of the initial balance is broken and there was a short build-up, which means the price is going to move down, and even if the price is going to move up, again the price has to at least be trading inside the initial balance. Then only there is a chance of reversal. For that, you are being safe and you have taken a trade, and also you can stay for more time in your trades. So this gives a solid foundation of the market direction. Let's find one more. Let's say for this, let's look at this market. Price gap down. After 2 or 3 trades, the market remained sideways. Now if you would have applied initial balance, you would have seen over here that there was no trade for you on a particular day. So this is how you can use these two strategies. Thank you so much. Hope you like. If you are being benefited from this strategy, you can comment. You can also share with your friends. Thank you so much. Bye bye.